Tritax Eurobox is a relatively new investment vehicle. Tritax, the manager, has had a lot of success in the UK, having launched a UK-only logistics platform back in 2013, which has now grown to about 4 billion of assets under management. And off the back of that success, we looked to Europe as a sort of next stage in that sort of logistics story, and we could see that Europe as a sort of market, a broad market, was a little bit behind the UK and indeed America, certainly in sort of e-commerce and penetration of e-commerce into the retail sector, which has driven a lot of logistics growth in the UK. So success in the UK, and last year in July 2018 we IPO'd Tritax Eurobox, so it's listed on the London Stock Exchange. We've had an initial and a subsequent equity raise where we've raised about 460 million of equity, and it's a geared vehicle, so we have a debt strategy on that. And that has allowed us to go to Europe and source now 10 assets, hopefully soon to be a couple more, across 5 countries within Western and Central Europe. So we have 5 assets in Germany, 2 in Belgium, 1 in Spain, 1 in Italy, and in Central Europe our first asset is in Poland, just north of Łódź in Stryków. And Poland and Central Europe is an interesting market for us. Poland in particular, and that's somewhere that we're going to focus on in the first stages of this investment vehicle. I think by volume of the market, in terms of size of the market, Poland's probably the 9th largest logistics market in Europe, with about 16 million square metres of logistics floor space, logistics industrial floor space. So that's quite an important market. Czech is probably half that. So we're focusing on Poland. And Poland is, we can see it's very attractive for occupiers. And it's attractive for occupiers for several reasons. Geographically well located, but with terms of occupying there and operating there, there's good benefits. So rents and occupational costs are low, labour cost is low, and infrastructure is very good, and clearly Poland is positioned with frictionless borders. To the east you have Germany, which is a huge market, 4th largest economy in the world, and other markets beyond that, to the west and to the south, etc. It's a kind of really good location for occupiers to position themselves. And so where we can invest in modern, well-specified warehousing, let to good occupiers, strong covenants, that's an area of the wider European market that we need to be in, and so that's particularly attractive for us.